Let's get started. First of all, I want to welcome everyone for this first edition of the quarterly product update. This is something that was requested by several of our accounting firm partners. So we're going to make it quarterly. The goal is to present the latest product updates, but also more importantly, listen to your feedback. So we'll make it an interactive session. I think it's manageable with the number of participants that we have. So let's jump straight into it. Unless Rima, did you want to add anything before we start?
Thank you, Nadim.
Amazing. Okay, so this is going to be largely a product tour. So I'm going to share my screen of what was released on Wafeq in this quarter or the previous quarter. Rima, if there are any questions in the audience or
Sure.
the hand raise feature is enabled, but if not, please type your question on the chat. Okay, so great. So this edition is focused on UAE firms. So we'll present some features that are specific to UAE. The main one at the moment is regarding corporate tax. So as you know, corporate tax went live. This is the first year that corporate tax needs to be filed in September. So we worked on a feature to allow accounting firms to more easily generate the taxable income. So I'm going to go through this feature and show you how you can use it for your clients. And then we'll take questions on it before we move on to the next feature. Okay, so first of all, you will see in the reports under the tax section, there is a report called Corporate Tax Taxable Income. So this will calculate the corporate tax by essentially deducting the deductible expenses and then exempting the exempt income. And how do you define that something is exempt or deductible? There's two ways. The first one is you do it through the chart of accounts. And I'll be mentioning also some tips on how to work a little bit faster in Wafeq. This is super useful. So Control P opens the quick launch menu. So in your chart of accounts, you will notice if you open an account, this is so obviously for cash accounts, there's no deductibility. You will need to go to the revenue or expense account. So for example, you will see here for this revenue account, the default corporate tax treatment. Okay, so you have two options. For revenue, it's either exempt or taxable. Now, when you set this up at the account level, next time you create something, whether it's an invoice or a journal, Wafeq will automatically use the default here to book the transaction. So for example, this one is taxable. If I'm going to go and create an invoice, so I like to switch to sheet view because I see a lot more information here. So you will see that Wafeq will automatically set this field to taxable because it takes it from the default of the account. Okay, so here the account was, for example, interest income was also set to default to taxable, as you can see here. And same thing applies obviously for expenses. So for expenses, whether you're creating bills or cash expenses, you will also see the corporate tax treatment field on whether it's deductible. So here you will have three options: deductible, non-deductible, and 50% deductible. Now that's the first method that I mentioned to you, is you set it as a default on the chart of accounts. And that's a good start actually, because it will simplify a lot of things for you. You don't have to specify it at the transaction level. But let's say you do need to specify it at the transaction level. So for example, let's say you have a travel expense account. Normally it's deductible, but for some, let's say you have a policy where if there's no receipt, then you don't want to deduct it. So you can override the corporate tax treatment and say, okay, this is going to be non-deductible. So that gives you full flexibility and full control over what you want, what you can deduct, what you want to deduct or exempt. And this field, you will see it pretty much everywhere. So if I go to manual journals, even on the manual journal, I can specify whether a certain line is deductible or non-deductible. Of course, I need to choose a revenue or expense account, and then here I can specify if it's taxable or non-taxable. And for an expense account, it will show me the three options: deductible, non-deductible, and 50% deductible. Okay. Now, once let's say you've closed the year, you want to start looking at the taxable income report. You can go to reports, corporate tax, and then so you can specify the range here. Obviously, it's going to be typically a year. And then you will see how the taxable income report is generated. It starts with the net profit, the accounting net profit. This is the same number that you will find on your profit and loss net profit. So from there, we remove exempt revenue and we add back non-deductible expenses. Okay, and here, this case, it's going to show you, let me try to take a larger range so we see a bit more data. Okay, so we have multiple years. I don't have exempt revenue here, but let's go and change that. So this is dated 2025. Let's say we're going to exempt this. Did I pick a correct account here? Sales, is it posted? 25. So here, one thing I want to check is the financial year of the organization. So the financial year ends on 31st of December. You can change it at any time. What this does is it changes the way we calculate retained earnings. So it affects your balance sheet and your trial balance. So let's go back here to see that this is not taxable, exempt. Now it shows up, okay. So this here, we are deducting the sales because it's non-taxable. And then we add back the non-deductible expenses. We get to the taxable income. So this is typically the amount that is taxed at 9% if you meet the requirements to be taxed at 5%. So, sorry, correction. The amount that is above 365,000 will be taxed at 9% if you do not apply for small business relief or other exemption conditions. I think, yeah. Okay, and of course you can export this report to Excel. Now, typically, how's your workflow going to be? Usually, like during the year, you're doing the bookkeeping, you might not be checking or you might not be really fully aware that, let's say you're booking an expense, is it really deductible or non-deductible? So you might not do this on a monthly basis, right? So you'll do it at the end of the year or the beginning of a new year. You're preparing the tax return. What you want to do is typically you want to, for example, you go to your purchases, you go to your expenses, and then you can, for example, filter on, let's say you want to go over, you realize that, for example, anything that is rent expense for whatever reason, or meals and entertainment, I want to make sure that I'm not deducting it, or let's say I want to put it as 50% deductible. So you can do this, and the best way to do this is in Sheet View. Anytime you need to update a lot of data, it's always better to switch to Sheet View. And I'll give you some shortcuts here to show you how you can work faster. So let's say I want to filter on meals and entertainment account. Okay, and then here I want to set these to be 50% deductible. So I can do here, I can either drag the corner of that cell down, just like you do in Excel, or I can do a Command C to copy. Let me do non-deductible and to show you. I can do Command C to copy, and then I can highlight the cells and Command or Control C, Control V, or Command C, Command V on Mac. Okay, and this is generally this is the best way that you can apply on all cells. So anywhere, for example, you want to reclassify this account, you go to Office Supplies, Command C, Command V. Okay, and this is great because you can do it in even with many, I mean, with hundreds of rows. Okay, so here, so let's say I want to rebook these to be non-deductible, and this is usually the workflow that you'll do. You'll either go through your expenses, for example, you'll add filter conditions, and then you will change the deductibility, and then you can revisit your taxable income report. And same thing, you might want to check on invoices. Typically, invoices are taxable unless your business meets specific conditions. Okay, any questions on corporate tax?
Yes, Nadim, we have a question from one of the audience. They are asking, is it deductible by default, or we should go and update all the accounts now? Thanks.
If I recall correct, so in order, you can easily know by going to your chart of accounts and then checking what is the setting. I believe by default, the account is deductible if it's an expense account, and it's taxable if it's a sales account. So it's a good idea to go and visit these settings and set them up. I think the best way is to export here. I think the corporate tax treatment is in the export. It is not in the export. Okay, yeah. Okay. All right. I want to talk about another workflow that we recommend to accounting firms. So this is the workflow that utilizes the Wafeq inbox, the Wafeq OCR, and the Wafeq OCR. So this is a feature that actually many customers aren't fully aware of. So each organization comes with an inbox, which is essentially an email inbox that is dedicated for that organization, that your client or you can send any document to that inbox. It'll show up in the inbox. Wafeq will automatically scan it with the OCR. And then from here, so you will see, first of all the actual email body. And then from here, you can either book it as an expense or a bill. So for example, if I book it as an expense, Wafeq will pre-fill all the fields based on the OCR that it did. And what it will also do is that if it's the first time it sees this supplier, it will suggest to you to create the supplier. So for example, here it's giving me suggestions to create Wafeq as a supplier. Okay, so I can click here. And you can see here the name is pre-filled, the tax registration number is pre-filled. I just need to hit save. Okay. And what it does is if it already finds a supplier, even that is kind of similar spelling, it doesn't have to exactly match the spelling. So for example, you could have a supplier called, let's say, Wafeq, but in your database or in Wafeq, and then here on the invoice, it's Wafeq FZ LLC. Of course, Wafeq will recognize it. So it will recognize similar spellings of a supplier. It will also try to match by VAT number. So if you, for example, let's say you created this supplier through the suggestion of Wafeq, you'll see that the VAT number here is pre-filled, and this is super useful because next time you get an invoice from that supplier, we will check based on the VAT number if there's a supplier that exists in Wafeq. So then you have 100% guarantee that this is the correct supplier. Whereas the OCR, always to keep in mind, it does its best to try to find the best match. So you always need your eyes to verify that this is the correct one. Whereas if you do it by VAT number, it's 100% correct, and it will give you here an indication that it was matched by VAT number. Okay, so once you decide, let's say, to get it to an expense, what Wafeq does is first, if it's already seen this supplier before in Wafeq, it will reuse the same account and the same pay-through account, because we assume that typically, from a supplier, you typically always purchase the same type of things, so you book it to the same account. And here, one useful thing here that you can have a quick peek at the previous transactions, just to verify what did I last book this expense against, like what was the account that I booked it against, just to make sure that you're not mixing up accounts. Okay. A new feature will come up very, very soon, hopefully this week, that will also give you a warning that this file here that you have attached to the expense might already have been attached to another expense, meaning it will warn you of duplicates. So it will tell you that this expense might be a duplicate with another expense. So then you can take action and decide whether you want to go ahead still and book it or don't, or avoid double booking. So this hopefully will go, this is going live this week. So it will fill the date, the currency. If there is a tax, it will also guess the tax based on the tax amount in the OCR. So here there's no tax. Okay. Okay, so this looks good. I want to go ahead and save it. So the nice thing is you can see here, I saved it as an expense. So you can see that this email has been processed essentially by me as the bookkeeper. And if I go to the expense, you will see that it was created. And you'll see that there's the attachment automatically that was added to the expense. And the nice thing about it is that if you open the expense, you will see the trace, the email that that originated this expense. So if you click here on the email, you will see the actual email body, and this is useful for maybe additional context for audit and so on. Same process for bills. So if I go back to the inbox, I want to convert it to a bill. Everything's exactly the same, except on the bill, you can add line items, so you can itemize this expense if you need. And also, by the way, forgot to mention, if that supplier also has typically a cost center linked to it. So if you typically have booked if you booked the last transaction or the last expense or bill against the cost center, Wafeq will also reuse that same cost center again to reduce the amount of data entry. Okay, so this OCR feature actually it's free, it's unlimited, and it works not only if you send to the inbox, but also if you create a bill or an expense. What we recommend is drop the PDF here, and Wafeq will scan the bill, and then it will pre-fill the fields here for you. So it saves you a lot of time. Any questions on the inbox feature? Okay.
No, thank you, Nadim.
Yeah. So here typically also like I will mark this as done because then I'll be able to see, okay, which email have I taken care of and which are still left pending. Okay.
Okay, Nadim, we have a question actually.
Okay.
We have a question regarding the VAT. Can we look adding 5% VAT when choosing outside UAE in the place of supply? Because last time we had an issue, we mistakenly put outside UAE in the place of supply, but we add a 5% VAT on the sales invoice. The result was that the 5% VAT not shown in the VAT statement, but was shown in the VAT ledger.
Okay. So at the moment, I will restate the question and I'll show what this person meant. So in the UAE, you will have on the invoices an additional field, which is place of supply. Okay. And by the way, this field, place of supply, will not show if you do not have a VAT registration number or tax registration number set in your organization details. So you can see here, tax registration number is empty. Wafeq interprets it as you're not VAT registered, so place of supply is not required. Now, if I enter a VAT registration number, then the place of supply field will show up. So let's do that. And also, if you don't have a tax registration number, the invoice titles will say invoice and not tax invoice. Okay, so now you can see I have the place of supply field, and it will also show up on the sheet view. Now, what this person is asking, it would be great if the user chooses outside UAE to disallow them to choose VAT on sales. Absolutely, that's a great suggestion. We'll take a note of that. At the moment, it's not possible. Unfortunately, you cannot prevent the user from selecting 5% VAT on sales. So the impact here is if you go to reports and you go to VAT. So, and I'll talk a bit more about the VAT return once I answer this question. But essentially, so if it's outside the UAE, you will not see it here. What you booked, if you booked it as 5% VAT, you will not see it in the VAT return, but it does go into the ledger. Okay, so that's one thing to pay attention to, and this is something that we can improve on our side. So I'll talk now a bit more about the VAT return because it's really related to that. So how does the VAT return work? Let's look at the tax rates first. So if you go to, for accountants, you go to tax rates. Whenever you create a new organization in the UAE, Wafeq will generate these system tax rates. Okay, so these are based on the UAE VAT rates. So you have the out of scope, reverse charge purchases. This is standard rated, and then the exempt zero rated and VAT on sales. So these are system tax rates, and you can identify them by this W here as a system tax rate. If you create your own tax rate, my own, let's say a standard rated VAT, let's say you've done that and it's sales. Okay, and I will put it as 5%. If you create your own tax rate and you start using it everywhere in the transactions, it will not show up in the VAT return because of Wafeq, because the VAT return of Wafeq relies on these tax rates. Okay, so you should always be using the system tax rates. Now, if for whatever reason you want to still create your custom tax rate, then the best way to generate a VAT report is to not use the VAT return, but instead use the tax report. The tax report is a more generic report that gives you by tax rate, the taxable amount and the tax amount. And then you might want to do a bit more, like, let's say, a bit more work to figure out what you want to, let's say, claim as input or input tax or not. So going back to the tax rates here, so this is the custom tax rate. Generally, most of the time you will not need a custom tax rate. So you can do all of your work with these tax rates. So the way it works then is that, let's say you have, let's go to the VAT return first. So this VAT return is in the FTA format. It's exactly the format that the FTA will ask you when you are submitting your VAT return on the Emara tax portal. Okay, so these are all the box numbers and so on. Now, you have box number 1, so from 1A to 1G. These are the standard rated tax rates by emirate. Okay, and this is why place of supply is needed, is to basically fill out these boxes from 1A to 1G. So if you put place of supply Abu Dhabi and VAT and the standard tax rate of 5%, you will have a taxable amount here and tax amount here. Then you have, so the tax refund, this is typically provided by the FTA, I believe, automatically when you are on the Emara tax portal. This is calculated along with the goods imported. This is automatically calculated for you, so you don't need to enter them. On the Emara tax portal. On Wafeq, it's not calculated. It's not handled, it's left blank. Then you have the reverse charge provision. So this is whenever you have a reverse charge, you have to use the reverse charge tax rate. And let's have a quick look at what the reverse charge tax rate does. So let's say I'm going to create this expense, and I'm going to choose 100 to simplify the math, and then I'm going to choose reverse charge. So this is the rate is 5% and it's reverse charge. If you look at the journal, and by the way, for those who don't know, anytime you see a green icon, you can hover your mouse and get a peek at the journal. So this is the journal that was generated by the expense. So you can see the reverse charge generates a debit and credit on the VAT to offset them. Let me here jump quickly to the VAT return. Jump back. So this was the reverse charge. Zero rated supplies. This is if you use the zero rated tax rate. Exempt supplies. This is if you use the exempt tax rate. Goods imported. This is calculated by the FTA on the Emara tax portal. Adjustments and additions to goods. This is also something that you can enter on the Emara tax portal. Same thing for the expenses. And then you can see the total value of recoverable tax and net payable. There will be a feature in this quarter that will come out that will simplify the VAT return even more, and that will allow you to much more closely manage how much you have in payables once you pay the VAT return to record the payment correctly. Okay, before I'm going to mention what I'm going to talk about payments in a bit, how to pay the VAT. But first, I want to show you this VAT checklist. So this is a checklist that flags some things that might require your attention or that might be, let's say, critical. So for example, you issued an invoice to a customer that you typically, let's say you apply 5% VAT on them, but you forgot to apply the VAT. This will be flagged as critical. And you can go and view which transactions like invoices or expenses or bills are mentioned. So here it says you have an invoice lines with no sales tax rate. This is unusual, right? Because most of your invoices are going to be standard rate tax, unless of course you are in a business, is in a line of business that does a lot of zero rated. And same thing, it will check your simplified invoices, your bills, your expenses. Okay. Now, let me talk about what happens to the general ledger whenever you're entering tax-related transactions or tax on transactions. If I go to the chart of accounts, you will see there's a liability account called VAT. Okay. Now, Wafeq uses a single account. Some other systems use two accounts, one for output VAT and one for input VAT. Wafeq uses a single account that records both output and input VAT as net. And you can see this is a system account, right? So every time you add a tax rate to a transaction, we create journals against this account. So if I go to, let's say, I can see, go to my balance sheet or my trial balance, and I can see, for example, obviously this is not going to be negative most of the time. Most of the time it will be positive for you. You can see the current liability as at that date. Okay, now what I recommend is whenever you're ready and your tax, let's say you're closing your books and this is the final VAT return, what we recommend is to move the balance to the VAT payable account. This way you have the account VAT payable, which represents how much you owe the FTA, and so you're ready to pay it. And then you leave the VAT account for the current period, okay, to keep track of the current period or the current quarter. And you can do this with a manual journal. So journal. So what I'm going to do here, VAT and VAT payable. So I'm going to debit, I don't know how much, let's say 1,000, and then credit VAT payable. And then I'm going to post it, let's say I'm going to post it at the beginning of the quarter. Let's say, sorry, end of the quarter. Okay. Yeah. Now this process of moving from VAT to VAT payable will be automated this quarter. This is part of a feature that I mentioned that we're working on, which simplifies the VAT return process. So at the moment, this is the flow that we recommend, but hopefully by the end of this quarter, it will be something that is easier to manage. Okay. So let's say you filed your VAT return now and you paid it via bank transfer. How do you record that payment? So you go to your bank accounts. Let's say I paid it from this account. So I will book a ledger transaction. So I go to ledger transactions. I will say I paid it. So you really have two ways. The first one is you book a ledger transaction. So which is, let's say, VAT for Q2. And then I will put it as negative because it's a withdrawal and the account is going to be the VAT payable account, right? That's the first way to do it. And you can see that a journal was generated here. This other way to do it, if you do your reconciliations on a regular basis, you don't need to enter it as a ledger transaction. So let me, for example, delete this. At the time when you're importing your bank statement, so either through a bank feed on one of the banks that Wafeq supports or through a manual import, when you import your statement, let's say this is, okay, let's say this is the payment for the FTA. You can simply classify it to the VAT payable account. Okay, so you do it from your statement and then the bank transaction will be marked as reconciled. So these two ways depends. Are you doing reconciliation? Most companies do reconciliation, but we've seen also companies that don't necessarily do reconciliation in the software. They do it on the side and they use ledger transactions. Okay, I'm going to pause a little bit here and see if there are any questions.
Thank you, Nadim. No questions.
Okay, great.
Okay, we had one actually. Okay, Nadim, we have a question regarding Wayo. Please, when Wayo is linked to the bank account on Wafeq, every time there is a missing transactions, and we need to import them manually. What is the reason of this, and how can this be fixed? Thank you.
Please reach out to our support or to Rima directly, and we will investigate. It should not. You're saying every time, then we definitely need to look into it. I know that bank feeds are often, how do you say, like, it's quite notorious in, honestly, in many markets, you know, in the UK and in the US, that bank feeds have issues. Unfortunately, these issues are on the bank side. So we work with the bank to resolve all the issues as they come. This should not be happening every time. We need to report it to EO if it's happening frequently. But please reach out to Rima and we will sort this out for you. Okay. So we've covered the VAT return, payment for VAT. We covered the inbox. We've covered the corporate tax. One of the small features, but that really make a difference for accountants, and that, you know, they tell us that they like it. It's really as simple as the ability to have multiple tabs open and working on multiple organizations at the same time. So for example, here I have this company. I can work on this without logging out, and I can refresh the page. And I can also work on this other company open another time. I can also refresh the page. This is super helpful, especially for accounting firms that need to manage multiple organizations. So that's one thing to mention. Okay, I'm going to talk now about basically the dashboard where you can manage your subscriptions or your organizations. So if you are logged into, let's say, your accounting firm organization, and I want to take a moment here to remind everybody that as a Wafeq partner, you get a free account or a free organization on Wafeq that you can use. You can use it for your own accounting. You can use it for whatever purpose, but you need it in order to be listed on the accounting partners page. And you will also need it in order to manage your clients, manage the organizations that you are serving. So if you're logged into your organization, you go to manage subscriptions. This page will list all the organizations where you are at least admin, so either owner or admin. Okay, so here you have all the organizations. You can, the plan that they're on, whether they're subscribed or not, the billing account, which is essentially who's paying for the subscription, which organization is paying for the subscription. If it was canceled, when it's renewing, or when it was last renewed, and then when it was created. And then you have additional stats here that might be useful for you, like how many monthly subscriptions I am managing, how many annual subscriptions, upcoming renewals, past due subscriptions, and then the amount that is past due here. So from here, you can edit the plans of your clients. So if you have admin rights to this organization, you can edit the plan. And here you can change the billing account. So for example, let's say I want, me as demo company AE, I want to pay for the subscription. I want to manage the subscription for my client, so I can change the billing account, or I can give them hand it back to the client, which is what we call here the original billing account. So let's say if I take ownership of this subscription, I can change the plan, and I'll pay. And when I take ownership, my client will not see in his organization, he will not see what is the plan. He will see the plan name, but he will not see how much it costs, for example. So if you have, preferential rates. I mean, you do have preferential rates with Wafeq. The client will not see these rates. So what the client will see is a message saying that this subscription is managed by Demo Company AE. That's it. Okay. Okay. So that was a quick tour of the subscriptions to help you manage the subscriptions. There is an upcoming feature that allows you that, so currently you will get one invoice for each subscription. Okay, so if you have 10 subscriptions that you are managing, that you're paying for, you will get 10 separate invoices. There is something in the works that will make a change so that you get only one invoice each month. So it will simplify your accounting, especially if you have a large number of subscriptions that you're managing. Okay, are there any questions?
Yes, Nadim, we have a question. While downloading the sales invoices, we've noticed that a few invoices are getting duplicated.
Okay.
Yeah.
Yeah, so this is not a duplication. So when you export your invoices, we export the line items. And if an invoice has two line items, you will see in the Excel that we are repeating the invoice fields. So for example, in this case, in this view, you see this invoice has two line items. We are not repeating the fields for the invoice, but on the export, so it looks like this invoice. It looks like this is a duplicate, but actually these are two separate line items on the same invoice. And if you scroll to the right, you will see the line items. So there's two line items. I hope this answers the question.
Thank you, Nadim.
Okay. One last tip that I personally really like in Wafeq is when you are doing bank reconciliation. So first of all, the banks are available in the quick navigation. So if I type, for example, I know that I have WIO here on this organization. I can type WIO and I can just jump straight to the statement, for example, and you have the ledger. So typically I go to the statement because I want to reconcile, let's say for this month. A nice feature that comes with the Sheets experience is the ability to quickly, for example, I'm going to search for foreign exchange here. And all of these, I want to classify them as bank fees. As I mentioned here, I want to fill these. I do Control C to copy and then Control V to paste. This is a great way to quickly reconcile without having to set up rules. Rules are not yet available on Wafeq, but there's something in the works that will be similar to rules, that will allow you to have more advanced, let's say, rules in order to reconcile. But this is typically the workflow that we at Wafeq internally follow for our own accounting. So typically we will, for example, do wafeq.com. We know that this is a subscription. Anything that's Wafeq space com is a software subscription, right? And if I'm here, I can also set the tax rate. If, for example, this includes tax, I can set the tax rate here, but on purchases. I can also set the contact, or I can, create one on the fly. You'll see it everywhere. I can set the project and the branch. Yeah. Yeah, that's one of the ways to really quickly reconcile your statement, at least if you have a lot of cash transactions. That's quite useful. Okay. I think we will conclude here if there are no questions in terms of the product demo. But I would love to hear some feedback or feature requests if you'd like to share with us what you'd like to see on the roadmap. What are some pain points that you have that for you are very important for us to solve? If you have anything to share, please you can type on the chat. So one thing to mention while we're talking about feedback, so we do have a public roadmap on roadmap.wafeq.com. So you can see what's currently in progress. And you can add a feature request. So you can add it either here or in accounting firm's request. Okay, I see.
Okay, Nadim, I had a question.
Yeah.
In payroll, how to update bonus?
Yeah. So in payroll, a quick overview of payroll. So payroll allows you to automate the accrual of salaries and the payment of salaries with the optional ability to send payslips to employees. So the way you set it up is under payroll here, you set up the employees, you set up the payroll line items, for example, basic, let's say here, let's see, basic. And then if I want to add a line, I click add line, housing. And then this is the account that I want this line item. So let me do it really quick. Let's say 5,000 and then 1,000 here. So what I've set up here is basically the template. So a template for this for the employees. When it's time for me to kind of accrue payroll or run payroll, I can go and create a pay run. I just need to make sure here include pay run is ticked. So if I create a pay run here, you see it moved me to the pay runs sheet, and it created a draft payslip. Now, once it creates a draft payslip, I can still edit everything here. So to answer the original question, you just want to update the bonus. You want to even add a bonus to this payslip. Let's say it's a one-time bonus. You click add line. You can see here that's a separate line. I don't know if you can see it on the screen, but you can add bonus. And then you can tag it to, let's say, another account like employee bonuses or extra benefits. And you can add the amount. Now here I specify the date, for example, that that I want to book this payroll, or that I want the journal to be booked in, and then I post it to the books, and I do posted. It's asking me for something here. When I post it, the journal is created. So we credit payroll payable. And here I have the option also of sending the employee. Now I cannot send here because this employee does not have an email. The payslip, you can right click here and download the payslip if you want to preview it. You will also are going to be able to send to all the employees at once. So the payslip looks something like this. Okay, line items, your company logo will be here if you have a logo, of course. I think I didn't type here. Okay, so yeah, so you can always edit the payslip even after it's been generated. And when you make the payment, let's say you paid the employee, you can go and record a payment here, just like you do with any invoice or bill. Yeah. Okay, and then the payroll will be paid here. Okay. All right. Well, thank you, everybody. Thank you, Rima. We'll see you in 3 months, and but please don't wait for this quarterly webinar. You can directly reach out to Rima on any feedback you have or any issues you have. We'll be happy to help you.
Sure. Thank you, everyone, and thank you, Nadim.
Thank you. Nice day.